Welcome to the Rose Show podcast. I'd like to now talk about expertise, intuitive decision making, which is what you do as an expert in this field. Um,
and we just rallied 2 points instantly. So this is an important event. I don't know what this is. I haven't looked at the news. I've been talking to you, but this is, occurred 3 minutes ago. This is an important level. I'm going to put an anchored VWAP right there live as we speak. And let me just
oh,
put it in the right place. That's where this move began. So let me just show you what I expect will happen in the next couple minutes is that if that was the little peak, we're going to start to see something like this. And
mm-hmm.
then if there's a good reason for that, then we'll see this VWAP from that beginning starts to find support. And I want to be a buyer here. At the same time, I'll put a VWAP off of that peak, and that will come down and look like this. And even on this 1 minute time frame, what we might start to see develop is a pinch between here. Now, that's what I'm thinking might happen. Maybe this was just some news that it completely falls apart, but I want to look and say, okay, this now looks like an important high to me, right? Even on
Mm-hmm.
this 1 minute chart, we're just making a lower low on the 1 minute chart. So I'm going to put a VWAP right there. And I'm
Uh,
going to color code that red just so that we can see, how that develops. So I'm thinking that it could likely pinch between those the way I just drew out. But while I'm looking for that to happen, I want to go to the 15-minute time frame and say, what's going on here? Is there anything? Did we just make it up to the anchored VWAP from this peak right here, which ties with the 5-day moving average? And we didn't. But that, if we start to move again, this will be my very short-term target. And I know this isn't what most people are looking for, but we just happen to have something occurring live in the market that might
mm-hmm.
end up being a very good lesson. So, we're pulling back to that. Now let's see if whatever the catalyst for this big supply demand shift 5 minutes ago, if we start to see buyers in here. Now, very short term, it's looking like it's maybe trying to, right?
Mm-hmm.
So let me just get rid of my drawings in there, and I'll put these volume weighted average price off the beginning and the peak right here. And let's see, just kind of how this develops. We had a big volume move up, lighter volume on the consolidation. We'll come back to this in a minute because I don't want this to be viewed as just a day trading tool. This is just an
Mm-hmm.
opportunity to potentially learn right here, right now. So a couple of stocks that I'm looking at, for instance, would include DT. And
Mm-hmm.
DT reported earnings over here. It gapped up. And now you can see that this blue is the year to date anchored VWAP. And it's been holding above that until today. On the right, we have a 15-minute time frame. So we broke below that, and then it acted as resistance early this morning. So that's telling me, one, it was in a pinch between the earnings report. We had that declining. And what I've really been looking for this stock to do was something along the lines of this is for that pinch to get
Mm-hmm.
tighter and then break higher above here. This 5-day moving average would come up underneath it. And it would have been my intention to buy right here with a stop underneath the higher low that might be at that point. We don't know if that will be the point, but that's kind of the way I look at it. Because when we look at this daily chart and we back it up to a weekly time frame, we've got a chart that looks like, we had a stage 2 uptrend, stage 3 distribution, stage 4 lower highs and lower lows decline. And if they didn't scare you out in there, they probably wore you out in here over the last year as it kind of went sideways. But during that time, what do we have? We have a rising 10, 20, 30, and 40-week moving average. We had a break of that range on an increase in volume. This weekly chart, we're seeing a diminished volume on this pullback. So when we look at it back to the daily time frame, here we are again. Now, I haven't given up on this stock yet, but I don't want to buy it while it's in that pinch, because it's just saying there's indecision here. There's no reason to really buy it yet. We're seeing a compression of energy. If this ends up being a shakeout, what I would be looking for here is that, let's just clean this up and say, let's say we can get back above this today. What would that accomplish? That would accomplish a lot of people who bought it over the last month after that earnings report. They're probably getting stopped out, giving up on it, saying enough's enough. I'm out of this. It made a lower low. It's below the year-to-date VWAP. And then other people might say, hey, I'm a short seller. I'm going to short it in here because I'm thinking it's going to go back on that daily time frame and go close that gap, which it might. I don't know. None of us knows, but the bullish scenario, if it could occur, would then, if it breaks below there, what happens is the people who are still holding it, they're the strong holders. They believe in that earnings report. They believe that we chased it for that gap and now we're going to add to it. So they're going to buy more shares. Who are they going to buy those shares from? They're not going to buy them from people who are now shorting the stock, because the people who are looking to short it say, hey, that was a failed breakdown. I'm not going to short my shares. The people who had their stops underneath this low, we've resolved the weak demand in the market. They've given up. So who's going to sell them that stock? So it might run up quickly to this 5-day moving average, create a higher low, and then be back into this pinch. And this ends up being, the people who are selling short in here right now, they're going to start to cover and say, oh boy, I'm wrong in here. So I've got to look at this and see if, and so it's about anticipation, right? I wanted to see it hold the year-to-date VWAP, and it didn't, but it didn't cost me anything. Just because that's what I wanted to occur and it didn't occur, it didn't cost me a dime. I'm waiting on the sidelines for this to develop. I'm waiting for the actual evidence. The market doesn't care what I think about the earnings report. It doesn't care what Warren Buffett thinks about the earnings report, which I haven't even looked at this one since then. But, here is Oxy Petroleum. They just reported the other day, and here's an important volume weighted average price. You can see it was defended here, pretty much generally in this area. And now it's being defended here as well. So, you just can't make these levels.
That's a year-to-date anchored
No,
V-WAP?
the blue one is the year-to-date. So what I did here is I went back and said, where this move really began, started right here.
Right there, yes.
So I want to measure from that point. And you can see it was defended here and close to it here and close to it here. And now if it rallies up and then fails from here, we're going to see the opposite of what I just described on the other way, that we're going to see that, if it runs up in there, the shorts cover, and then the longs get in, then it breaks back down. Well, then those longs are going to be, from the last year and a half, they're going to be in a losing position. So that would become a good potential short sale that would develop, again, with a period of lower highs and lower lows. It doesn't go straight down, but this is the type of activity that that just kind of, it's just there in my mind when I look at this chart. I don't have to, analyze it over and over again.
You see the patterns. It's that pattern matching that you have. You match it against recognizable prototypes in your mind from studying these charts. And now, are you going to put a pinch on this? And when you do a pinch, and I love in your book how you talk about it being a battle between buyers and sellers. And then you watch for that break between the pinch, and that's even a lower risk, higher probability trade. So when it breaks out of that pinch.
So look at, and I didn't even, I don't trade commodity stocks, number one. So this was just in the news the other day. So I was looking at it, but when we put an anchored VWAP off of that peak right there, it tried to get above it briefly. It was capped right here, And now you can say, yeah, it's pinching between those. But even here, to me, the way I want to see a pinch develop is I want to see that pinch tighten.
Tightened, yes.
And then the energy really compresses. If this stock were to go up, to 65.5 tomorrow and break above this volume weighted average price, I would look at it and say, wait a minute, it just went from 58 to 66. It just rallied 8 points on a $60 stock. That's 12.5%. I don't want to buy after a 12% rally when, look at the last 12, big rallies. They failed up in there. So I wouldn't chase it up there. I would say, now let's see if this pinch can tighten, and I'd rather buy it here. So if I buy it at this point, my most recent relevant higher low is down here. That's way too far. So I want to see it tighten up, buy it here, and then set my stop underneath this higher low. And now I only have to risk 2 points or 2.5 points versus 8 points.
Very nice. So with pinches, you use the highs and the lows. Do you find that the most effective with pinches?
Yeah, sometimes. So, here's a good one that's been good in Coinbase. So this just happens to be, let's take a look at the 30-minute time frame. That dark blue line is the year-to-date volume weighted average price. I mean, perfectly, they're buying it at that level. So what we want to say is, what about from the peak? And it's not perfectly through there, but from this gap that caused, where the supply and demand really shifted, you can see it's kind of pinching between there, and it's getting tighter. We have lower highs, but we have support. This might end up just breaking down, I think, on Coinbase. One that is developing is in Harley Davidson. But again, it's too tight. There's that year-to-date anchored VWAP on this 30-minute time frame. And then here was this gap. So that's an important event. But again, it's too loose in here. So again, maybe it runs up like this. I wouldn't care about that move. But if it then did this,
and then tightens up,
then I would be saying, okay, that confirms what I'm seeing on this weekly time frame and this daily time frame, that maybe that pinch is going to get tighter in there.
Very nice. Love that demonstration of the pinches. Now, the placement in your book, you talk about price highs and lows, and then you have the high volume, which emotional connections and price memories live. I love that point. Then the fundamental events, and then, a very important one I found fascinating and I didn't know, was that the year-to-date Anchored V-WAP is actually where institutions establish their fair price. Is that correct?
Well, here's the psychology behind the year-to-date anchored volume weighted average price. Let's say you have a fund that runs, a subsector group, little fund that is based on, blockchain, crypto technology, and their basket of stocks that they're compared against. I don't know what the benchmark is. We could do this, it'd be easier if I used a semiconductor index.
Sure.
Let's just do that. So the semiconductors, they're running a semiconductor fund. And here's the year-to-date anchored volume weighted average price. Well, the semis are up 12% or so year-to-date. This is the average price. And they want to outperform that, because if they outperform the benchmark, they're going to be able to get a bigger bonus at the end of the year. They're going to be able to keep their job, right? So, at the end of the year, when their investment committee says, hey, how well did Joe do with this healthcare? How well did Susan do with the semiconductors? Here's the benchmark. The SMH was up 14% at the end of the year. Susan was down 12%. Got to get rid of her. Whatever. But what they'll do is they'll look at the components and they'll say, okay, well, AMD is an important component. Do I want to buy this stock and get at least as good as the average price in there? The volume weighted average price was originally called the price a naive trader could expect to obtain. So they're saying, this is average. If you can't do at least average, you probably don't have a job. You don't have business, having a job here. So as it comes, when the stock starts doing this, and it's up 30% year to date or whatever it was, and they're underweighted in AMD, they're feeling kind of stupid and they're thinking, oh boy, I can't give into FOMO and buy up here and just chase this. But if it pulls back to the average price for the year, then I can sneak back into this stock and be as good as the rest of the market at least. And if it breaks down, maybe I can buy a little bit more and try to, just so they're playing not only an absolute returns game, as we know, they're playing a relative game, which is kind of a silly game. I think that, if the market was down, if the S&P was down 12% and I was only down 8%, I'm lauded as a hero, but you still lost money. That's not what we're trying to accomplish here.
Exactly. Wow. Very nice. Love this. Now, the handoffs. I know that's a word that you coined in your book, and you talk about that on trends. When you're on an uptrend, you go and you put the handoff in the higher lows, and the downtrend, you put it on the lower highs. Now, right. That to me is sort of an art, I guess, knowing which ones to place it on. If you could show us how you do handoffs. And I saw in your book, you have quite a few running at the same time. And you actually combine that with pinches as well.
Yeah, pretty sure. Cool. So just like any, head and shoulders pattern, let's say your inverted head and shoulders pattern. Well, if you just look at the head and just the right shoulder, you actually see a cup and handle, right? So patterns morph and they change. And notice where the buyers just real quickly, we didn't see perfect support at that level, but look at where the buyers just definitively took control from this rally. We had some pullback, so we want to avoid it in there, but this is where the buyers just said they took control. And again, this is why I don't buy the pullback to the volume weighted average price from that, but to buy right here when the buyers take control at that point. So now I want to measure it and say, as long as it holds above there, and so if this is a day trade, I would now have my stop under here because that's the volume weighted average price from this little low. We've gone back above the volume weighted average price from this peak just 15 minutes ago. So I'm just following up on the little lesson that we have here in real time. So now it's running and we can look at it on, and say, well, how does it look on different time frames? This is maybe the level I think it can get up to. Was there an event right here that reinforces it now? You can see the volume weighted average price from this low held as support. It was broken. Now it has the potential to become resistant. So this looks like a reasonable place to think it can go, 396. So where are we now? We're at 395 and a half. That looks like, maybe there's 50 cents of upside for a day trade in here before maybe you want to go look at the daily time frame and say, well, wait a minute, we're right on the 200-day moving average. Is that important? And just view what your time frame is. So going back to, let's go back to the SPY and say, we had an important low from COVID and, we rallied up and it pulled back and touched it right here. So, and then it rallied again. So that was where a new momentum campaign began. So we anchor one right to that point. I didn't do it properly. We anchor right to that touch. So we're handing it off at that point. Let's just go isolate this.
I love the name, handing it off like
that. We're handing it off there. That's where the buyers, regain control. And then where was the last place that volume weighted average price was touched? Right here.
You can see that.
And then it kind of just got sloppy in there, but then it tested it again right here. And then right here. And that's close enough for me to say that's an important level. And here's a new momentum campaign. So we're just handing it off and saying, now, if I missed this prior move over here, well, maybe I can get back involved on strength here with my stop under that level. Maybe I get back involved here with my stop under this level. And the way I really want to look at it is what we just looked at on the 1 minute chart is, we knew on this day that might be an important high. So where do the buyers regain control? Right here. 100% certain that the average short is from that point is losing money. The average long from that point is making money. So the momentum is shifted back up, just like we're seeing right now on this very short-term time frame. And in the book I wrote, just there's a lot of examples that I use, charts constructed of weekly time frame, and there's some in there with 1 minute time frames. And a lot of people will say, well, I'm not a day trader, this is foolish, why would I look at this? Because here I'm able to explain in real time what occurs on every time frame. So when I look at this and I say, I'm long here, well, if it gets up to this point, that's pretty close to where I think it can go. So now I'm going to sell half of my position up here. Or if it doesn't get up to that so-called breakout point, I'm going to now maybe switch to this I'll make this a 2-minute time frame and say, if it makes a new 2-minute low, my stop is under that candle. If this is, let's say, the low of this candle, and we begin a new 2-minute period right here that looks like this, well, then I'll raise my stop underneath that 2-minute low as time progresses forward. So I have a time stop and I have a price objective to get a little bit of that risk off. So if I take this much gain on a third of it, that reduces my cost from here to really down to about right here. So now if I put my stop at break even on the balance, I can't lose money. So there's a lot going on there. And the key is, a lot of people want to be day traders. And they look at this and go, wow, you can just do this on a 1-minute chart. And it's a skill that's developed. It's that, I've been looking at these forever and I can see it in real time and wait for that objective. I don't want to buy this pullback because maybe I bought the pullback here at 395 and I panicked at 394.60 because this day trade looks like it's falling back apart. Well, now it's doing what it's supposed to do. So now again, my stop underneath this 2-minute low. And if it does this again the next 2 minutes, well, then my stop will go under here. And just continue to let the market do what it's going to do. So if I, sell a third right here, my stop on another third goes underneath the higher low, then my cost basis on the balance is really down here. That's my balance on my final third. So I have the luxury now to say, maybe I can transition this to a longer term time frame. Maybe I'm thinking that, yeah, that was the low at the 200-day moving average back here where we made this big mess. And I'm going to be able to hold this for the next 3 days if it continues to move higher on that final third. But I won't want to break even on it. So more than likely, I would put a stop, right here or something to guarantee that I don't let this winning trade turn into a loser, because it's a winning trade right now. There's, and the thing is, most people want to chase it as it's doing this rather than say it's normal for a stock once they run quickly because of news headline or whatever it is. I'm sure there probably was one. I have no idea what it is, nor do I care, because that doesn't help me make money. Looking at this helps me make money. So there you have it.
I love that. The slope and the rate of change. And what we notice is that the anchored VWAP is dynamic. It changes with the trades. And, I am not a day trader myself, but I understand the importance of zooming in. It's like what you've done on this chart is amazing. You've taken the bigger time frame, the longer term, and we see that little tiny little red can, we see that little green, we see that little tiny little thing, and we want to know what's going on over there. So then you go to this chart and it's like you zoomed in. And now we get a closer view of what's really going on. So absolutely makes sense to look at it across all the time frames to get a better view of what is going on. And this is a great example here of that. Wow. Yeah, who cares about the news?
I mean, it's gone from 35.40 to 36.60. I mean, that's 8 minutes, right? 10 minutes right there. $1.50 move. That's why if your skill set is advanced enough to look at
look at that volume
charts, there's opportunities.
Absolutely. Look at all that volume we've had.
You mentioned volume, and in here it did what it's supposed to do. It was up on big volume. The biggest volume occurred at the turning point. That was the peak right there. And then what happened to the volume? So that was this little turning point. The problem is we don't, if the next candle went higher, we don't know that that's the turning point. But once it started pulling back and we added that volume weighted average price right there, what happened to the volume? It consolidated on light volume, and that gave us a clue that there was a big hurry to get involved. Now clearer heads are just kind of battling it out a little bit, but there's not a big hurry to get out. And then it gets back above here, and it wasn't spectacular volume. And that's the thing, that people wait for volume, end up buying on this candle, or waiting for the breakout, buy on that candle, versus looking at where did the buyers actually gain control right here,
AWAP, yeah.
Sell some to the breakout people, raise your stop up now underneath this 2-minute candle. And now it's in a no-lose position here on a live trade. People say, well, that only works in hindsight. Well, there you go, F you.
Exactly. In your book, you make that clear point that if you buy the breakout, you actually lose out on more money you would have made if you had purchased it where it crossed over and broke right through that anchored V-WAP right there, much lower.
So you're getting in 60 cents late, which if you're a day trader, that's giving up a big edge.
Absolutely. I love that. And it helps you remain objective instead of having fear of missing out. You watch that line, which tells you everything that you need to know. And right there, when it crosses over, beautiful. You make it look so simple, but I got to be honest with you. It is simple because I utilized something very similar with that and recently, and I had a successful trade, waiting for it to break through on that before the breakout. So I love that.
So we want to anticipate, and if we feel like we missed that out, we wait for the pullback, and if it doesn't pull back, well, then you missed the trade. So what? But instead, you say, okay, I saw this occur out of the corner of my eye when we're talking, and I got excited, and I wanted to go run and put a VWAP on there. I was thinking, oh, I hope that talking to Rosanna, it doesn't cost me money. I've got an opportunity here, and getting involved right here. That's now the stop.
Awesome. This is live trading. This is so exciting. This is all live.
It's continuing to move higher, and it's gone beyond what I thought would be a reasonable target at that 5-day moving average. And that's why I look at a target and a level of interest. I expect now that because the 5-day moving average is declining, this rally will not hold. Doesn't mean it can't go like this, but I think that if it does, it's more likely to do this in the next day and a half. So I'm thinking of all these time frames together and saying, well, then I want to put an anchored VWAP off of this low. That's the daily volume weighted average price. And maybe tomorrow it pulls back to today's volume weighted average price. And tomorrow's VWAP will look like this. And this is something in there as well. And I want to be a buyer right here with a stop under here. So it's always about not just looking what is, but what's the potential? Where are we going? So now
that pattern,
right here, it's just about, what is this low? This is 72 cents. This low is 70. So there, time to sell some. And that is a real aggressive stop for a day trade using that 2-minute rule right there that I have. So now I don't know that that's an important high, but we just had a really nice run, and it was making higher lows for every 2-minute candle here. Now that trend has changed. So the very short-term momentum, I want to be out of some of it. And if this candle closes, well, for a very short-term trade, I'll go like this. I'll put an anchor right at that point. I'll switch it to a 1-minute time frame.
Interesting.
And see that, will that now do something like this, where it kind of comes down to the VWAP from this low, and that VWAP off of that peak pinches, and maybe there's a re-entry even right here with a stop under here as the time progresses.
Wow, this is amazing. Right in the middle of our podcast, we had this major event occur, and we're getting it in live real time with the master, Brian Shannon. This is awesome. Wow, look at that.
Yeah,
Let's see.
in some ways it's good to do it during live hours because
This is
you know,
so
if I
cool.
do a PowerPoint, you won't see this. But again, here we, and look at just traditional volume
Mm-hmm.
expands in the direction of the
Yeah.
trend and diminishes on the pullback.
Mm-hmm.
That's a healthy volume pattern.
Yeah.
And it's represented by the volume weighted average price is rising because it's volume driven through time, volume weighted average price. That's all we're looking at.
Yeah.
It's
And
simple.
your anticipation of the pattern seems to be working. Look at that, where the candle's going. It's going right in the pattern that you outlined.
We'll see.
And so far it is. It's fascinating.
And it's like you said. I mean, it's just this is what I'm thinking is likely to happen based on
Mm-hmm.
looking at charts like this, all day long for the last 32 years. We're saying, you
That's
pick up a
it.
couple things, otherwise you shouldn't be
Yeah.
in the business any longer.
Well, this is exactly where the expertise-based intuitive decision making occurs. It's from this pattern matching that you have from 32 years of doing this. So we're learning from you, the master here with Anchored V-WAP. This is impressive. And now the buy the dip. This is a very popular axiom that was further accelerated during the 2020 expansionary free money period.
Yeah,
People are still doing it, but you have a great axiom that I love, which is buy the strength after the dip. So I noticed that you anchor with the recent high, and then when the dip occurs and then it comes back up, like you just showed us on this chart, past the anchored VWAP, that's the time to buy. So this is a clear example
yeah.
of buying the strength after the dip, which is a much safer, lower risk buy.
It is because if you're buying during this pullback, and let's say you're leveraged, let's say you're trading the futures, I mean, we don't know what is going to happen. So we look at it and say, I mean, maybe this was just some BS headline and
Mm-hmm.
it could have just completely failed.
Yeah.
Instead, of buying that dip and all that uncertainty, and maybe you got lucky and you bought there this
Yeah. It's
one
about,
time.
yeah.
But 9 out of 10 times you're trying to buy one of these and you might just spit it out right there.
Mm-hmm.
So instead, what the anchored VWAP from this peak tells us right here, and this peak right here that I just drew in, is from that peak, once we pulled back, and you notice that I drew it about a minute later,
Yeah.
that I anchored it right there, and I just anchored this one about 2 minutes ago, that the seller, from that little high point, the sellers took control for the very short-term time frame. Now it's most likely, as we were expecting in this one as well, as it's a short-term pullback, but it could have failed. So rather than buying all that uncertainty, when it gets back above this level, you can see it hit it once, twice, 3 times, and then went through. It tells me that anyone who shorted this rally because they thought it was up too much and it was going to fail, on average, they're losing money. Anyone who bought in here now is making money on average, and their confidence has increased. So here's the point where we can say with 100% certainty that the buyers have regained control
Mm-hmm.
from that peak. It doesn't mean they're going to maintain it because, stop under here, right? That little candle. And now from this peak, where I just drew it in, look at where we just found supply on that candle.
Yeah. Wow.
And maybe we're going to see, what I drew in. And maybe it's going
Yes,
to
it
break
is filling in what you drew in.
it.
Look at that pattern of where you said it was going.
Again,
It's
it's not meant to be a prediction at all, Rosanna. I don't, I'm not a seer of the
of course
future.
not, but you're
It's
looking at the patterns.
We're
It's impressive.
anticipating
Yeah.
what could happen
Mm-hmm.
based on what's kind of a normal thing. When the market gets a little bit giddy and you start seeing everyone tweeting about, hey, this stock can't go down ever again, you start getting really nervous.
Mm-hmm.
And so it's
Absolutely.
just about trying to keep that balance and realize that this battle is being fought all day long between short sellers and buyers on every time frame. This is a minuscule little look. This is, this is the last 30, 25 minutes since we started talking about this trade. Um, and that's just one little piece of today. Today, here's where today began. And again, look at how we gapped lower
Mm-hmm.
and we found buyers right near, not always exactly right, which is why I want to buy strength away from the VWAP if I'm looking to be a buyer. I don't want to buy the dip because where does my stop go? What's my objective level? And we can do a handoff right here. And it
Mm-hmm.
really didn't provide us value because the market was going back and forth. But then we broke resistance. We did so on big volume. We pulled back on lighter volume. We're finding supply still at that 1 minute candle from the VWAP from that peak. So, let's see. I mean, we don't have to sit here and watch it. That's not the point. But the point is, again, it's fractal. Whatever occurs on one time frame, it's the same principle on every single
Mm-hmm.
time frame. And I was very careful and certain to make sure that I included stuff for day traders, for swing traders, and investors, and to show some examples where you might have anticipated a breakout here, but it went down instead. So what's wrong with having a losing trade in a book? Because if you have a stop, it doesn't matter. It's just part of the process. We don't have to see every trading book filled with nothing but winners because that's not real life.
Yes, it's not. I think the average trader, even professional, I think their win rate is about 50, maybe 40, between 45 to 55%. So there are losers. It's about keeping those losses smaller. So it's important that you have the reality of trading because there will be losses, just like in life. We make mistakes, we fall down, but it's about picking ourselves up and going forward again every time. So that's true success.
I
So
bet you're a great mom, Rosanna, to those three boys.
no, I try. Thank you so much. I appreciate that. They learned early in life about losses and they're all competitive chess players. So
Yeah, cool.
yeah, so it's it's and trading is very similar to that. With it's very trading is very gives you instant feedback. And you know right away.
Especially if you're on this time frame, right?
Yes, so right. This is absolutely, I love that it's zoomed in like this. You make it look so simple, and it is. It's a great indicator, the best indicator, in my opinion. I love that the gap we see in your book, you talk about the different gaps. There's many different gaps. And right here, we had one. You anchored it to that 4 p.m. Yesterday, I believe it was the
Actually, to
close.
this morning's open.
Or was it this morning's open? Okay,
Yeah, because that's
right
when the
there.
big that's when the supply and demand shock occurred on this volume. Now, if we really wanted to be accurate, we would look at the futures and consider the overnight volume as well. But
Mm-hmm.
this is generally close enough because there's not very much volume in the overnight session.
Perfect. I see that. So there was a gap and wow, very nice. So I love how you speak about the short squeezes and then you go on to anchoring the rewrap to the IPO of companies. It's like the birth
Okay.
of a company is where you anchor it. Could you explain the psychology and thinking behind that?
Yeah, sure. So, the quote I used in there was one from Gann, which is if you know the 0 point, you can measure anything. And for the 0 point for a stock is the birth of it, its IPO. There's a couple that came. So Mobileye is a great example. That they came public. Let's get off of this 1 minute time frame and let me move that out of the way so we can see it. Let's look at a 30-minute time frame. So this orange is the volume weighted average price from the IPO. Okay. And initially, the stock was a hot IPO. The buyers took control. Then it spent a few days below that VWAP. It was rejected right there. And then the buyers took control and defended that general area. Here's the year-to-date anchored VWAP, and you can see that this is what I'm drawing in. This is what I do for Alpha Trend subscribers each day is say, here's what I think is possible. We test that year-to-date VWAP. We run up to the 5-day moving average. We compress. Here's our volume weighted average price off of the all-time high. So we're pinching between the year-to-date anchored VWAP and the all-time high. So if we get a rally that occurs like this, I want to be a buyer over here with an idea that maybe it runs up to here initially and then maybe pulls back and then pushes higher, beyond that 20-day moving average and continues. But right now, it's the stock is making lower highs and lower lows. and it got rejected right at the 5-day moving average. So now this is on the shortest time frame. This is a stage 4 decline since the middle of last month. This is maybe stage 1 accumulation, and this would represent the beginning of a new uptrend that's in alignment with the uptrend on the daily time frame where we see that. So, we've got this big pattern of higher highs and higher lows. But if you just buy out of FOMO up here at 45, you're down at 38. You're down a huge percentage, right? So we're at a 50-day moving average. We're at the year-to-date anchored VWAP. This is a level of interest. I don't want to buy it here, but I want to look at it and say this was prior resistance. Resistance broken tends to act as support. The 50-day moving average often acts as support. The year-to-date anchored VWAP often acts as support. So let's drill down to a shorter term time frame and see what's happening in that area. The 5-day moving average is still declining, so I don't trust it yet. But I know that it has the potential to change, because where we were 5 days ago is now over. We're getting rid of this data in the 5-day moving average calculation. Tomorrow we get rid of this data. So if this stock just goes sideways for the rest of the day, well, tomorrow morning we're going to get rid of this data, and that 5-day moving average will be flat to rising. So it'll make a higher high above the flat to rising 5-day moving average. And I wrote about this in the appendix. And that's where I want to be a buyer. My first level of interest as potential resistance would be up in here. And then you can go back and say, well, that makes sense because this was support, which became defended support momentarily and then resistance. So, somewhere up in there is where I'll be looking for this to move. But I'm not going to just buy it because I think Mobileye is a great, sexy company and the earnings are this, and self-driving cars are all the rage. I want to buy it when it makes sense, when the buyers have regained control. Otherwise, it's just a good story. And if I want to trade it, and if I feel like I need to trade it, well, then maybe I'll go down to a 5-minute chart or a 2-minute chart and trade it there. But I'm not interested in doing that. I'm interested in the swing trade setup.
Got it. Question I have for you is, when you how do you identify potential stocks to trade? Do you look at fundamentals, or do you look at certain sectors that you prefer, or do you look at charts, or do you see what potential setups for the Anchor VWAP are? Like, what is your identification strategy?
Yeah, my main thing, Roseanne, is I look at multiple time frames together, and I scan through a large universe of stocks. And again, I've been doing this full time since 1991, so it's easy for me to go through a list of 1,000 stocks on the weekend, drill that down to 300 I want to watch for the next week, and I don't watch them and think I'm going to trade all 300 of those. That would be insane. Nobody wants to do that. But what I do is I get a feel for the market based on a bottoms up approach, saying, on my list I've got AMAT, I've got AMD, and I've got NVIDIA, and they're all looking like they're getting ready to go. And then I look at the semiconductor index, and it doesn't look ready yet, but so I use the stocks. I'm a big believer that the sector follows the stocks, not the other way around. Most people say, I want to look at the markets, look for a healthy market, look for the healthiest sector in there, and then look for the stocks underneath the surface. To me, you get a better feel and ability to anticipate where the market's going by looking at AMD and Intel and AMAT and NVIDIA and saying, look at how we're rallying right up to that VWAP off the peak again.
Wow.
And say, here's where the market is telling me I should look at these stocks because they've pulled back. They look like they're in a short-term stage 1 like Mobileye is. And I look at that chart, and my mind just automatically draws in the scenarios of what could happen.
I see.
And I look at that and say, here's what could happen in the next 2 to 3 days, kind of like I drew in for Mobileye. And that's one I want to put on my list that I want to watch each day, just to see if it's setting up the way it is, to gain familiarity with the way the stock trades. And you just become a little bit more intimate with the stock.
Absolutely.
So that when it really sets up, I've got a plan that I can say, okay, here's the personality of the stock. The stock is a little bit crazy. I want
Mm-hmm.
to, maybe just forget about this stock or use smaller share size or, something like that. But it's all about a bottoms up approach for me. And I look at trending stocks. I want to see them in that pullback mode and start to anticipate what could change in the next 3 to 5 days next week. That's how I come up
Mm-hmm.
with my list for the week. What could change in the next, 2 to 5 days that I might be able to trade this stock on Tuesday or Wednesday or Friday of next week and go from there.
Beautiful. I love how this right now, this chart, we're seeing how the trend is hugging that A anchored VWAP. It's right underneath. It just touched it and it's staying in that range. It's like amazing how, and then the anchored VWAP is dynamic. It's changing with that trend and those trades. Um,
Yeah. And,
it's
and here's the
amazing.
thing, Roseanne, is why does this work is the question, right? Why
Mm-hmm.
why does it keep coming up to that VWAP
Why?
from 15 minutes
Uh-huh.
ago? And why does it keep getting sold? Because there are hedge funds out there. And I spoke to, Tommy Thornton, I'm sorry. I knew a Tommy Thompson as well, but Tom Thornton used to work at a multi-billion-dollar hedge fund, and they were very aggressive. And
Mm-hmm.
he told me, Brian, the guy that they were, the guy whose name the fund was under, um, he would say, after a stock made a near-term high, it hit their price target of 37, let's say.
Mm-hmm.
I want to sell 500,000 shares in the next 30 minutes at VWAP or better from
Mm-hmm.
that peak, and I don't want to do more than 10% of the volume. So they have these advanced algos that would go in and
Mm-hmm.
build this, and they will sell in these little 2 minute time buckets, just a little piece of that.
Ah.
And each time it gets up to that level, they're going to lay on a little bit more. And if it gets up through it, they're going to really push hard and try to
Mm-hmm.
accomplish more of that order at the price above that, because they want to get, because the brokerage firm will say, we'll give you guaranteed VWAP from that point.
Mm.
We'll give you the price a naive trader could expect from that point. So it kind of puts a lid on the stock from there.
Ah, fascinating. Thank you so
And
much for
yeah, and
sharing
even on a
that.
30-minute time frame, I mean, a 30-minute trade, that's the point. It's not just for these longer term, build a position
Mm-hmm.
of 5 million shares over the next month.
Well, if it's good for these institutions and they follow it, I think it's absolutely imperative that us retail investors follow as well and utilize these rules. And this is very impressive watching this on the chart in live real time. It's actually just following underneath that anchored VWAP from that high just about at past 2 o'clock today, Eastern time. Interesting, fascinating. Thank you so much for
Pretty
this
cool,
demonstration.
huh?
This is a live demonstration. This is really amazing. A live demonstration we had today. Awesome. So I want to ask you, how did your lovely wife, Leanne, improve your book? You mentioned her in the book and how she helped improve it. What was her contribution?
Well, I had a developmental editor who helped me with, laying the chapters out and where things flow and that sort of thing. And she just kind of, helped me put the pieces of the puzzle in place. But as far as, line by line reading, my developmental editor wasn't engaged in that. And I wasn't sure. My first book, I had a woman who kind of did it all. She, helped me with the design, all of it. So this one, I didn't have that person to read it and say, this makes sense or that doesn't make sense. It was more, does it flow? My job's done. So she did a great job with that. But my wife Leanne said, Brian, your name is on this. Let me read it. And she works with me, so she's not a trader, but she hears me all the time, and she
Mm-hmm.
hears me talking about this silly VWAP thing, and the moving averages and time frames. And anyways, she said, let me read it, and she would read it. And I thought, I would think I wrote something just so clearly that I deserved Pulitzer Prize for it. And she would just come in and go, Brian, you have to change this. You have to change this and this. I'd feel all deflated and get defensive,
Yeah.
but I knew for a fact she was right because
Yeah.
she has a little bit of understanding just based on, listening to what I say. But if it's not clear to her, then how can I sell this book to other people and expect them to follow along? So she made all kinds of just amazing, recommendations for here's how it can flow better, make this clearer, reword this, change this sentence, put that word in front of this word. And I mean, it's the book went from a C to an A because of what she did.
Oh, I love that. That's so well, we thank you, Leanne, for all you've done. The book is A plus in my mind. Definitely an A plus book. My favorite one on trading for sure. Very important book. And we want to know your future plans. I saw on Twitter there was some tweeting going on about an automated anchored VWAP. What's going on with that? Any plans with that? And what are your thoughts?
Yeah, John Muchow does a great job of creating things for different software platforms, TradingView in particular, and a lot of people have trouble with where do I anchor, and to take away some of that subjectivity, to create some programs that do the week to date, the 2 day, from the most recent, big high after let's say we have a high and and you're looking at a weekly chart. How do we know it's an important high? Well, maybe it pulled back at least 5 or 6%. So we're going to automatically anchor a high to that point. Or in the daily time frame, if it pulled back 2 to 3% over 3 days, then we're going to set an anchor there. So just to kind of help people visualize it easier and put some training wheels on it, truthfully. My fear is, though, that people will use these and become dependent upon them and expect them to be a system rather than realize there's a real art to it. And what you see, I just drew in there. And
Mm-hmm.
again, you can't make this up. We had repeated tests of that resistance. Look
Yeah.
at VWAP
Look
from
at
that
that.
peak. I popped one in from this low that held it, and these circles I just put in are to indicate that's where buyers just took control
Mm-hmm.
for this move. Now we're getting a little bit extended, so if you're going to be a
Mm-hmm.
buyer here, your stop would go under here, number one, and to sell some on this breakout. At this point, I would sell. I didn't take this trade, but I would sell
Mm-hmm.
half of it on that move
Mm.
because we're getting extended.
Yeah.
In the time of day that we're in, maybe we're going to get a little bit of a pullback. And now the stop would be right here at the conjunction of the VWAP from the low and that high,
Is
and
that a
basically
pinch?
break even.
Is that a pinch right there from that low to
That
that
would be
high?
even on this, even this 20-minute. So we saw this pinch right in here,
Mm-hmm.
and we're seeing this pinch right here,
Nice.
and it did what it's supposed to. I mean, again, you just can't make it up, and here it is in real time.
Wow. Yeah. Nothing goes straight up or straight down. It moves as there's a battle between the buyers and sellers. And look at that go. Wow. I am interested to know what news hit the market today.
I have
Um,
no desire at all.
I'm
None.
curious. I'm just so
It
curious.
won't help me.
I love this. So, Brian, thank you so much for everything. I just want to say before we go into Alpha Trends and you tell us about the services that you offer, excellent book for all. I love it. I think it's just the anchored rewrap makes total sense to me. I think in my opinion, it's the best indicator. And I promise you, Brian's not paying me to say this. I mean this completely from my own self, reading this book and using it. And that's key to use it. And I've been placing it a lot on the price highs and lows. Love it. Absolutely love it. And simplicity is key. Look, we have bandwidth constraint. We want to minimize noise. We have information overload already. And I keep my charts simple. And this is the number one indicator. And I love it. Thank you so much, Brian, for writing this book and letting us all know about this amazing indicator. Tell us about Alpha Trends. You founded this amazing stock trading educational company. Tell us what the services that you offer are for everyone.
Well, I'm glad you described it that way because it's really meant to be educational. Each day I do some videos. I do a end of day wrap up of the market, the S&P, the NASDAQ, the things you see in my weekend video. I do that every day for subscribers. And then I talk about in another video trade ideas for the next day, or ideas that we currently have open, updating the stops, and laying out just the way I did with these other stocks. Here's what we're looking for in Mobileye. It's a couple days early. Let's keep an eye on it. Let's start to stalk this trade. And then, in 2 days, maybe I think it's actionable. I'll say, I think it's actionable above this level with a stop here. What I don't like is if people say, Brian, you told me to buy it here, and you told me to set the stop. And I can understand why people get confused with that, but it's really meant to say, listen, we've been talking about this stock for the last 3 days. We've been watching it develop. It's starting to develop the way we anticipated, just like we did with this S&P here. Now it's time to say, does this trade make sense to you personally? It's your money. Do you think it makes sense? If so, well, then you should buy it. If you think it's going to make money, we're adults here. If you think that it's too risky, well, then I don't care. I don't care if you don't buy the idea that I think is a good one.
Mm-hmm.
And, it just doesn't matter to me, but set your stops. So, I have the forums where, people can ask questions about the stocks they're interested in, a forums board. And then every other week, I do a live video for subscribers, a live webinar like this, where we go over educational concepts and really try to hone in on mostly education. Then we look at some stock ideas as well, but that's the least informative part. A lot of subscribers think, hey, it's really important for Brian to look at my idea, but that's the least important thing that I can do. It's more important to say, here are the concepts. And I'll look at your stock and here's why I don't like it. Here's how I might like it. Here's how supply and demand is telling me, the translator. That's all I am. I've listened to this language of the market objectively for probably 20 of my 32 years of experience. And now I am the translator. I can explain to you why it might not make sense, put that in plain English, and then it's up to you with your money to decide what to do with that.
Absolutely. It's about being accountable,
Yeah.
making our own decisions. You don't press the buy button for us. You just help decipher the patterns that you're seeing and give us great ideas and just teach us all how to capture some profits from this, what we're seeing going on.
Right.
When I'm looking at this live, it's fascinating seeing some higher highs on this shorter time frame. And we'll see how it materializes into close today. Will we have it hold or will it sell off? Interesting to watch. Yeah, it's subjective versus objective for unbiased analysis of price action. Excellent tool. In closing, I love your quotes. Okay, throughout your book, you have Epictetus, you have philosophers, you have great quotes. And I want to end with this one, which I think is very appropriate with the Anchored V-WAP. Man's mind stretched to a new idea, here insert Anchored V-WAP, never goes back to its original dimension, by Oliver Wendell Holmes Jr. And that's absolutely true. That's absolutely true with the Anchored V-WAP. I, for one, will never be the same again. To me, this is the most valuable indicator. So I think that once you read the book, you'll probably agree with that, because price, volume, time, and only price pays. Yep. So this has been truly a pleasure speaking with you today and enlightening us on your thinking inside the mind of an expert, a rapper, Brian Shannon. Thank you so much. And we're forever changed and for the better because of this.
Okay. Well, thank you so much, Rosanna. And again, now we see that, like I said, if we bought this one, it's extended. So sell half of it up here on the breakout. And now that trade is over. You might still have some from over here. It's all about time frame and making the trade your own. It's not about trading on 1 minute charts. there's just a great opportunity for some education live here today, which I'm fortunate the market provided that. So I
Love
think
it.
this was a great lesson plan.
Absolutely. This was great and it wasn't planned. As always, impromptu is the most exciting. So just follow price as only price pays.
Thanks.
Thank you.
Thanks, Rosanna.
Thank you for listening.